Hey, this is Matt from InvestiQuant. Today is Monday, September 21st, 2020. And this morning we saw some weakness on the open. We had sizable down gaps in the markets and we pushed lower after the open, and we are holding down this afternoon. We're holding down in about the bottom half or so of the ranges everywhere except the NASDAQ. You can see the NASDAQ down here in the bottom left-hand chart. NASDAQ holding up quite a bit stronger than the others. NASDAQ's trading at the highs back within prior day ranges. But if you look at the other instruments, where we've got the S&P up in the top left, the Russell in the top right, and the Dow in the bottom right, you can see they have all held below the prior day's range from Friday. So Friday sold off. We gapped down this morning, and we are holding below Friday's range and have seen some weak action today. So let's take a look at what this pattern has done historically as we approach the close. So I'm going to go into Discover, and I'm going to describe this pattern for all four instruments, even though NASDAQ is likely not going to be true for today since it is acting differently than the others. But we're going to use let's use a 3 p.m. entry time. Here we'll set it up as a long, and I normally go in and set a opening filter. I'm not going to do that because the post-open filter I'm going to use to describe the action will, by definition, be a down gap below the prior day low. So I'm going to say that the high of the intraday range is less than the low from the prior day. So by definition, that means if the high of the current session is less than the prior low, then we are looking at a down gap. So I'm just going to select that right there. And then I'm simply going to say we're trading below the opening print at 3 p.m. Eastern time. So I'm going to come over here and put close less than open. The intraday close is referring to where the price is at the entry time, which I've got selected as 3 p.m. Eastern time. And next I'm going to go into the indicators section, and I'm going to put us in an environment where we are below a 10-day moving average but above a 200-day moving average. So kind of a weak bullish environment. That does the pattern. Now I'm going to hit view results. All right, and here we go. So these are the results of going long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when you are trading below the opening print at 3 p.m. and the high of the session is less than the low of the prior session. This is taking place below a 10-day simple moving average but above a 200-day simple moving average. And historically, it looks like we got about 46 samples in the S&P dating back to 2003, the NASDAQ coming in with 49 samples, the Dow 57 samples, and the Russell 28 samples. The win rates on these are all a bit weak. You can see the S&P 39% win rate, so 39% of these have closed higher than that 3 p.m. price. The NASDAQ 43%, the Dow 42%, and Russell 25%. Russell does have a few less samples than the others, but that is coming in the weakest. And looking at the average win, average loss on these, looks like the average loss quite a bit bigger than the average win here in the S&P. For the NASDAQ, it's pretty similar. Average win a little bit bigger than the average loss in the Dow, and then average loss just a touch bigger than the average win in the Russell. Let's go ahead and look at the S&P results distribution as well. This results distribution gives you a view of what has happened historically in a graphic format, where the taller the bars, the more samples there are. The farther to the extremes, so either the right or the left, the larger the move has been. And then the ones in red are losing samples. The ones in green are winning samples, when we've got a zero bar right here in the center to show you where they change at. So everything to the right of this zero line is in green. These are all the positive results. Everything to the left and the red bars are all negative results, and the far extremes are the large moves. Looks like the most common trade historically has been down about 4 points. And you can see there's been a lot of samples here relative to what we're looking at. Coming in here in the smallerish area. So this is minus 8 points, and just kind of eyeballing here. Plus 4 points or so here in the green. The one standard deviation markers, we've got plus 10 points and minus 18 points, with a couple more outliers down here on the extremes. We don't have a whole lot of outliers on the upside, so definitely more samples down here in red historically. So hopefully you found that helpful. Good luck the rest of the day, and we will see you tomorrow.